I can't see a very happy ending to this process. So interim deal or some act purchase here and there, I think at the end of the day is not going to satisfy the markets. We've had so many back and forths that now the pricing for the market is a protracted sort of back and forth going on without necessarily any clarity or resolution. So if people were expecting this trade deal, whatever the shape or form it comes through, would help markets find sort of a better bearing for 2020, they'd be disappointed and mistaken.
What's that going to mean then for the global economy as we move into 2020, still with this trade issue hanging over us?
There are ways to demarcate the narratives. One is the global investment malaise, if you will, around this trade tension. The other is secular trends in what's happening in the auto industry and the electronics industry. There, I think there is some glimmer of hope, even without a trade deal, because on the electronics side, particularly with regards to 5G and cell phone, we have seen billings pick up, shipments will follow, and that would help, at least for Asia, the demand side picture in the first quarter of 2020.
Which side stands to lose more? Is it China or the United States at this point in time?
Unanswerable question. I think it hurts both.
It hurts both. Let's talk a bit more broadly then as we move into 2020 about the state of the global economy. What do you see happening? Of course, we continue to see central banks easing around the world, despite the fact that we didn't get it from India yesterday. Right. But do you see that that trend will continue? Because a lot of central banks almost out of firepower, essentially.
That's right. So kind of running out of room, and there isn't that much conviction on that string that everybody keeps on pushing on. All you see is, huge amount of liquidity sloshing around the system, causing bubbles at property market here and tech market there, without any meaningful turnaround in the investment cycle, which in my view is a prerequisite to getting a proper global cycle going. So no, it'll remain lackluster, independent of these central banks' actions. But more importantly, this narrative that everybody keeps on hoping that there'll be a secular decline in the U.S. dollar, which will prop up EM FX, which then will create a harmonious pickup in external finance sustainability for EM. I think it's unlikely, because we will see all these trade-related friction and geopolitical friction and social friction. All of those things will culminate into a safe haven flow into the dollar. So Trump will not get what he wants in this area.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.